Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing earnings seasons, the All Ordinaries Index and this week's stocks of interest. Before we jump into the report, I'd just like to mention that if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. Let's get into the report. Earnings season, also referred to as reporting season, occurs twice each year in Australia and quarterly in the USA. This is the time in which publicly listed companies report their earnings and projected earnings. Reporting season is a very active time in the market and is part of maintaining market transparency and efficiency. In simple terms, it allows companies to deliver information to the market so that no one is disadvantaged. In reporting seasons, institutions and individuals review earnings reports and decide whether they want to make any changes to their portfolio. We can see an increase in volatility in the price of stocks that are reporting as the market reacts to the new data and speculators attempt to profit. It is not unheard of to see stocks jump 20% or more, or see them fall by the same amount in the weeks or months following announcements. Take Facebook for example. The price of its stock dropped 20% in just one single day after it reported. So what does all this mean for you? As we discussed, reporting season can see stock prices fluctuate and become more volatile. This can affect the emotions of both investors and traders, so much so that it can make them consider buying or selling. Making emotional decisions that are reactions to market movements are always unwise. Having taught and mentored traders of all levels and skills for more than 2 decades, one of the most important things I teach them is never trade on speculation, but rather on confirmation. When you make a decision as a reaction to the emotions of the market from an announcement, then you are speculating. Good, educated traders do not speculate, and regardless of what a stock reports, good traders always have a strategy in place in how they will manage a stock they own or are looking to purchase. So what has happened this reporting season and what do you need to know to be prepared for the next round? You can find reporting dates on each individual company's website, or you can contact the company's investor centre. This way you know in advance when the important dates are for the stocks you hold and you'll be more prepared. Sometimes companies will make announcements to the market outside of regular market reporting dates in order to keep the market fully informed. At reporting time, you will quickly see which companies' results meet or exceed market expectations, and those that where they did not meet their expectations. So how do you tell the winners from the losers? The answer is really quite simple for those who can read a price chart. Those with the skills to read and apply solid analysis to charts will easily work out how a stock price will run before and after announcements. Understanding charts is a much better process than relying on someone else's opinion as to what you should do or simply emotionally reacting to the market. Every week I speak to investors and traders who want to know and understand the market so that they can be in control. The problem is so few really understand the market. Now it's your money and your choice. So if you sit back and watch things going on, not really understanding it or what you should be doing, is it not the time that you took the time to learn? If it is, then give us a call and we can help. So let's get into this week's stocks. On your screen right now is a weekly bar chart of the All Ordinaries Index, and this is what I had up here last week, and you'll remember I've been speaking over the last few weeks about the possibility of our market turning over a little bit and just coming down for 1 or 2 weeks. It's quite possible that it may be doing that. If I just scroll this up a little bit so you can actually see it a little bit more zoomed, you can see here how last week went, which is the week ending the 3rd of August, being the first week in this month. You saw it opened at 6391 and closed at 6326. So it had a down week, a full range of about 68.5 points. Nothing too outrageous about that, but it did open on its high and close near its low. So the indecisiveness of that previous few weeks, you can see here where the opens and closes all the way back to that week ending the 6th of July, where it closed at 6355. The next week was 6351. The next week was 6377, just slightly higher, and then 6310. 6391, so slightly getting a bit higher over the last 4 weeks and coming back down. So it's just tipping over a little bit. That's pretty normal. It's nothing to be worried about at this point in time. As I said, we are in reporting season at this point in time, and I will look at a couple of the stocks for reporting season. It wouldn't surprise me if we had 1 or 2 weeks down, because obviously the market is finding resistance at that 6404, which is that 38.2% level that I have on my chart. So if it does come down, I'll put a retracement on there just to show you how far it possibly could go in this current move. I wouldn't expect it to be too high. Let me just whack that onto there. So probably looking at around 62.69 or 62.32 is where it will probably pull up if it does start to fall away. I don't expect anything too big. As I said, 1 or 2 weeks, and then start to move that up again. It'll move through that 6404 and right up to 6500, possibly 6600, and maybe up into around that 6700 over the coming months through towards the end of the year. So I'm actually still quite bullish on the All Ordinaries Index, but let's get into some of the stocks for the moment that are reporting. So I've got CBA, a Commonwealth Bank of Australia, is reporting. It's one of the biggest companies in Australia. It constantly reports all-time record profits, and looking at its monthly chart there on the right, you can see here how its all-time high is back in March 2015. So if you look at that, way above its 2007 highs, it's done very, very, very well. The most recent low we're seeing here is a 67.22. Now, depending on what it reports this coming week, right now is if I own Commonwealth Bank, well, actually, I don't own Commonwealth Bank, and I wouldn't be owning it right now based on the rules that I have. But what you're looking at here, it is in a downtrend. That means I need to assume it's going to continue to go in a downtrend unless it has some really big surprises. I don't think this downward move's stopped just yet. It may have, and we may start to see it move up again. The financials are gaining a little bit more momentum on the All Ordinaries Index than some of the other sectors within the marketplace, so it could have pulled up, but I need to see that at this point in time. I need to see a retest of this low at 67.22 before I get too excited about CommBank at this point in time. So just sit back and watch. Not a time to get into it, but if you are holding it or have been holding it, if it does start to fall away, I would be exiting. Next one we want is another financial stock, is IOOF Holdings, also reporting this week. And you can see here on this right-hand side of the chart here, it's a monthly bar chart. It's high here, and I'll just bring it up to zoom it right up for you. You can see here, this is the whole history of IOOF, and you can see its all-time high is $11.57 from January 2007. And if we look back to earlier, late last year, $11.46 was its high. So it's doing what they call a double top. There's a very heavy resistance on this, and it's been bearish since then. I think there's probably going to be a bit more downside on IOOF at the moment. So unless there's some huge surprise in its announcements, but at this point in time, again, it's looking bearish. And as I was saying earlier in the report, if something is, people that can read these charts know what to do already. So they've already got a plan in place. They don't wait for announcements. So to me, the announcement's not really going to change the direction of what this stock is actually doing. I want to quickly go through James Hardie. James Hardie is one of those stocks. It's quite interesting in terms of what it's been doing. As you can see there from that low in 2009 at 261, it's flying. It's gone right up to $24, currently closing, or last Friday it closed at $22.85. In a bull market, it's bullish phase. I think this stock is still going at this point in time. I don't think there's anything going to stop it at the moment. If you do own it, still stay with it. Would I be buying into it? I'd just be a little bit cautious about buying into it. It's not giving me more signals for further entries at this point in time, but it is looking good at this point. Again, Suncorp is another one reporting this week. This is the last one I'm going to cover this week. Another financial stock. So there's 3 financial stocks. You can see there's a whole lot of resistance here. If I put my little crosshair on, you'll see that level, that $14.92 level, is fairly heavily on this stock in terms of a very heavy resistance, having hit it way back here in 2014, again a little bit later in that year, and again in 2017, and that's exactly where it's at this point in time. So, but it has been, unlike CommBank, it's been trading up from this low back in 2016. So unlike CommBank, which has been trading down a more bearish, Remember, its high was back in 2015. So this stock's been trading up since February 2016, and I think it is possibility that it will continue on that upward trend, but I really would need to see it break through that sort of $15, low $15 mark, or those levels there right across this resistance levels at 15, 15.20 before I'd get too excited about it. If after its announcement it starts to fall away, then you might see it go below that low from a recent low in February at $12.61, but I think it's going to start moving on, so it might be a nice little one to get on if you are looking for a bank. That's it for me for this week's report. Remember, if you need me, if you want me to have a look at a stock that you own, please just below, give us a little message down below and say, hey Dale, have a look at this stock. I think it's doing X, Y, and Z. Just give me a little bit of feedback on it. And remember, if you like this, help other people in your family and friends by sharing these videos and liking them, and help us to get these out to a bit of a wider audience. So good luck, good trading, and I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.